If you are an Indian, then it should not surprise you if every other thing becomes costlier the very next day. The Indian currency, INR, ever since the nation's independence, though started out strong, has been losing ground to the dollar. The current trend goes at rupees 70 a dollar, and even when the currency is striking good against the British pound, which was priced at 107 just 5 years ago, but now values rupees 90 per pound. The RBI was called in to intervene, and it did stabilize the euro at 80 and 69 rupees a dollar temporarily. Despite best efforts, the consumer is gonna get a pocket pinch when fishing for appliances, FMCG, and gold. Not to mention oil, but we will get there in a bit. However, not all is sad for India. NRIs in general will benefit working with India. So will the exporters and the ever-growing IT industry. The US President, ever since his election, has put forth the idea of harnessing the entire potential of the US economy and population. Though it does lead the US into an isolation, but if it does the country good, then why bother? Even though pushing the US into an isolation, the press did not shy from taking on Iran by imposing sanctions. Since the sanctions, Iran has lost half of her crude oil customers, mostly the EU nations, which resulted in a shoot-up of crude oil prices. Trade war between US and China, the latter had ignored the Iranian sanctions, with India, like its usual partial ignorance, has decided to reduce the oil purchase from Iran. As mentioned before, the crude oil prices has risen, which could contribute to the reduction of purchase of crude oil from Iran by India. The usual method of trade of oil ever since 1970 is by dollars. The more oil you buy, the more dollar you spend. This is great for the dollar as its value keeps on growing without an effort, but if it does not do so good with others. For countries like India, which have a weak currency, petrodollar hegemony is a curse. Ever since the 1970s, whenever there's a fluctuation in the oil price and demand, rupee has slumped drastically. Recep Tayyip Erdogan, the mayor of Istanbul in 1994 to the PM of Turkey in 2003, and the president since 2014. The pro-Islamic reformer came across a military coup in the year past, in which his supporters of the AKP miraculously stopped an armed coup in the streets of Istanbul, following which he won an election with overwhelming majority and popular support, much of which he used skillfully to crush his opponents, of which is a pastor of sort named Brunson, Andrew Brunson. The US did throw over some hints to exonerate the US pastor, but things did not do so well. The US went forth with hammering some tariffs on Turkey, and it did not go so well with the Turkish folks. As mentioned before, the president has pushed the US to a self-dependent isolation. He wants to bring back jobs to the US by encouraging homemade steel, the industry that did put the US in the superpower race 150 years ago, and aluminum. But to ensure the export of steel and aluminum be reduced and unemployment crisis be solved, the president has introduced tariffs of 15% on aluminum and 25% on steel. The worst hit is Canada, as it was until 2017 the largest exporter to steel and aluminum. Other countries have just looked away or struck up some sort of deal with the US, while China is on a trade war and Turkey is terribly upset. So upset is Turkey that our currency, the Turkish lira, has crashed by 43%. US cars and alcohol, which were much appreciated in Turkey, soon fell out of favor and are imposed by counter tariffs by Turkey. With the Turkish situation in dire, the Qataris have decided to intervene and help, but this ongoing economic battle between the US and Turkey has made the investors skeptic and the market volatile, resulting in a 1.43% dip in the value of rupee per dollar. With this volatile condition, in spite of domestic investments piling up, the heavier and trusted foreign investors are cashing out for secure economies to the likes of Republic of Korea and Taiwan. With this constant hassle of global affairs, a seventh of the population of the world suffer from uncertainty of the economic conditions in the future to come. The aversion to the INR crisis will be discussed in another video. If you like this video, please click a thumbs up, share and press the red subscribe button. This was a 5 by You report, and see you until next time.